Good morning, everyone. You are watching a live daily market outlook session for Thursday, 22nd of March 2012, prepared by Windsor Brokers. Highlight of today was the China's data that showed that economic momentum slowed in March as factory activities shrunk for the fifth straight month, leaving investors fretting about the risk of to global growth and anticipating fresh policy support from Beijing. The HSBC Flash Purchasing Managers Index, the earliest indicator of China's industrial activity, fell back to 48.1 from February's 4-month high of 49.6. The new orders also sank to a 4-month low. Unexpected rebound in exports. Export orders failed to emerge, and the new hiring slumped to a 2-year low. With new export orders sluggish and domestic demand still softening, China's slowdown has yet to finish. This calls for basically further easing to come from Beijing. This was the comment of HSBC's chief China economist in the statement after the release of the PMI data. As immediate reaction of the market was certain slight pressure seen on the majors during the Asian session. From the European side, the comments of ECB President Mario Draghi gives more optimism, as he said that the worst of the Eurozone crisis is over and the European Central Bank will now act if inflation risks grow. This was the comment of Mario Draghi for a German newspaper interview released today. He was quick also to add that there was no inflationary threat from twin long-term lending operations the ECB has conducted in the recent months, which have unleashed more than 1 trillion euros into financial markets. Praising Germany as an example for Europe, he said it was now up to governments to make the 17-member currency bloc crisis proof. From today's events, as the markets are awaiting, especially the euro, series of PMIs from Eurozone that already kicked with the French PMIs that were already released a couple of minutes ago, coming in rather disappointing levels, as flash manufacturing PMI came at 47.6 compared to 50.0 of the previous month and 50.4 of the for the today's forecast, while services PMI came at 50.00 versus the same level of the previous month, but higher expectation for today did not appear to be workable at 50.6. German manufacturing and services PMIs are due in approximately 15 minutes at 8:30 GMT, while Eurozone ones are due at 9 o'clock GMT, and the forecasts are approximately higher than the previous releases, as German manufacturing flash PMI is expected at 51.1 compared to 50.2, while flash services PMI in Germany is forecasted at 53.1 versus the 52.8 of the previous month. Eurozone manufacturing PMI is also forecasted at higher level, 49.6 is today's consensus versus the 49 of the previous month, while services PMI from Eurozone is forecasted at 49.3 versus the 48.8. The significant are the levels of the Eurozone PMIs that are still below the 50 level. That is actually the borderline between the growth and the contraction, and the recent months dip below 50 level keeps still a threat on the Eurozone economy, as this holding below 50 might still signal the Euro bloc is not far away from the recession. From UK later today, it's retail sales monthly release at 9:30 GMT. They're expected to decrease to minus 0.5% compared to last month, a more positive figure at 0.9%. From Eurozone at 10 o'clock GMT, industrial new orders again decrease minus 2% is the forecast for today, compared to plus 1.9% of the previous month. America's kick from Canadian data at 12:30 GMT, pardon, with the core retail sales due at 12:30 GMT, forecast more positive from the previous unchanged level at 0.5%. Retail sales from Canada also a positive expectation for today, raised by 1.8%. Is forecasted for today compared to decrease of minus 0.2% of the previous month. The key release for today is US weekly jobless claims due at the same time at 12:30 GMT, with increase by 2,000 of new jobless claims seen for today. Forecast is 353,000 compared to 351,000 new claims, as this might be breaking the previous week's positive readings that showed that unemployment is on the downside, reducing the number of claims. However, there is no significant increase forecasted for today, so it's not going to have a stronger impact on the currently rather positive outlook for the U.S. economy regarding the job market. From US CB leading index due at 1400 GMT, a slightly more positive forecast from the previous 0.4 release at 0.6%. Eurozone consumer confidence is due at 1500 GMT, no change from the previous month. Figure at minus 20 seen for today. A couple of speakers from European and American central banks. Basically, the ECB President Draghi is due to have speech at 1600 GMT, while his counterpart Fed Chairman Ben Bernanke is due 45 minutes later at 16:45. And that was all from today's events. We're going to now take a look at the market movements and see the latest developments in the markets, starting with euro. As we can see, the single currency against dollar is entrenched within the 131.70 and 132.80 range, as yesterday's failure to regain our key barriers on the upside at 132.90, the high of 8th of March, and 61.8 Fibonacci retracement of 24.85 to 130.00 at 133.00, and subsequent reversal dip to 131.70, previous low of 20th of March, where the temporary support was found. Also, there was a 55 days exponential moving average that contained the downside for now. Recovery attempt again was getting short of 132.80, falling, running out of steam at 132.53. Now increases risk of completion of the head and shoulders pattern on the shown on the 4-hour chart, as the upside rejection at 132.53 now dips towards 132. That has already been tested, and risk is seen on the break of 131.70, which also marks the neckline of this head and shoulders pattern. Break of which, as well as 55 days exponential moving average, to trigger further weakness of the pair and extend towards the downside, with initial support coming at 131.41, the low of 19th of March 2012, as initial target on the downside, while further levels are at 131. For the next level is at 131.09. That marks 61.8 Fibonacci retracement of the latest up leg from 130.00 base to 132.83, where the gains were capped yesterday. The 4-hour studies are still in the positive territory, but started pointing lower, while negative structure on the hourly chart keeps the downside still vulnerable, and further extension and towards 131.70 base favored for now. To avert immediate downside risk, we need to see a regain of minimum 132.50 zone, 132.50-60 zone, which are the previous highs and peaks of these shoulders, in order to avert immediate downside risk and possibly refocus levels on the upside. For now, the risk is seen more towards the downside, and set completion of the head and shoulders pattern, and that is needed to see the break below neckline at 131.70 would risk further extension lower and keep the upside intact for now. The cable regained some ground after yesterday's failure above 159.13 when the strong rally surged through 159.00, 159.13 previous high, but was short-lived as the pair hit 159.22 high before the sharp reversal lower. Again, the 158.20 zone, our initial support, it's 158.30-20 zone, where the pair found the footstep. It contained the downside, and the fresh strength now is aiming higher with the 158.91 seen so far. We need to see break above minimum 159 and these levels of previous highs at 159.13 and 159.22 in order to confirm the end of the recent consolidation and the sideways range trading, and resume the broader uptrend of 156.00 basis for possible test of zone at 160.00 previous high posted on 29th of February. Supportive for the pair now is a regain of 200 days moving average that was briefly broken yesterday on the dip down to 158.16 low of yesterday, and this now offers initial support. The daily studies are improving, as we can see that they are attempting to break above their midlines, already holding slightly above their midlines. That keeps the positive tone in play, but we need to see clear break above 159.13.22 in order to confirm and open way for fresh strength towards 160 zone. On the downside, static, the 200 days moving average currently standing at 158.55, while the static support is 158.30.20 zone, and only break of this level to signal fresh weakness and keep the upside out of reach for now. 158.00 is also significant support, which marks 38.2% Fibonacci retracement of the latest uplift from 156 to 159.22, what is also on the 4-hour chart 55 days exponential moving average. And basically break of 158.20, 158.00 is to weaken the near-term structure and open way for further easing. 157.62 and 157.24 are the next retracement levels. Between them there is 157.50 previous highs of 13th and 14th of March. Dollar yen seems to be running out of steam as a renewed attempt higher. Broke briefly above 84.00 but failed to regain previous high at 84.17 with a quick reversal under these levels and a sharp actually fall lower, testing so far 83.00, our initial strong support, and the current range floor as the pair entered the sideways range movements in past couple of days after hitting fresh high at 84.17. There is also 55 days exponential moving average at this point, and the loss of this level would risk a further correction and the reversal of the latest uplift from 80.57 higher base up to 84.17. Immediate support below 83.00 comes at 82.80. That marks 38.2 Fibonacci retracement, and 82.63 high of 9th of March 2012 ahead of 50% retracement at 82.37, and the more significant and the quite strong support previous high and the low of 13th of March, also 61.8% retracement at 82 zone. Basically break of this level is to confirm the upside intact for now and allow for a stronger reversal as the daily studies now started finally pointing lower, moving off their extreme levels and this might signal some more significant correction of the latest very strong and sharp rally of 76 base posted on 1st of February 2012 that peaked at 84.17. A firm break below 83 and more important 82 zone is to confirm the correction underway, and look for the levels of the 82.24 is the first one, 23.6, but more significant will come at the previous highs at 81.86 and 38.2% of the entire up move from at 81.00 zone. A quick look at the Swiss franc. It seems the dollar is regaining strength again after a bounce of 90.75. Yesterday's low failed at our initial resistance at 91.50 zone that was hit yesterday, and the subsequent easing dip to 90.93, threatening a directly retest of 90.75 and the extension of the broader downtrend of at 93.33 high of 15th of March 2012. The fresh strength is now coming out of 91.00 zone, and this immediate target is 91.50 previous high that capped the upside for now, where is also the 55 days exponential moving average. We need to see break here in order to see signals for some stronger recovery, with the next stronger barrier coming at 91.75. High of 19th of March, also 38.2% retracement, break of which to confirm the temporary bottom at 90.75 and avert immediate downside risk in favor of a stronger reversal. And next levels are 50% retracement at 92 zone and 61.8 at 92.36, ahead of a static barrier, previous high of 16th of March at 92.52. The hourly studies are now emerging above their midlines and they're regaining strength as the pair currently is tapping through 91.50. That might signal some stronger recovery, and this keep the downside intact for the near term, while the daily structure is rather neutral at this point as studies are moving around their midlines. No clear direction. We need to see a regain of minimum 92.00 in order to improve the daily structure, as there is close to this level is 55 days moving average on the daily chart, and above it it's 92.50, 90 days moving average that are needed, clearance of which is needed to improve the current rather neutral daily studies, neutral to positive, as they are attempting to break above their midlines. With a clear break here and the regain of the moving average is required to improve the current structure. Above this we have 93.00, which is the main bear trend line drawn of 95.93. The quick look at the, where are we, British pound, pardon. At gold, it seems that yellow metal is coming under a stronger pressure again, as on the daily Ichimoku studies we see the prices again attempting below the daily cloud that initially held the previous dips at 16.34. There was a brief false break lower when the price bounced higher. The studies are now more into negative territory, as first signal is break below the cloud, with the other lines also pointing lower, and we need to see further break below previous low at 16.34 in order to confirm the negative stance on the Ichimoku studies. On the other side, the upside rejection at 16.69 high of 19th of March is now pressuring the initial support at 16.40 that has already been dented, opening way towards key near-term support at 16.34 low of 14th of March 2012. That will open way for further extension lower of the broader downtrend from a 17.90 high of 29th of February. The daily studies remain fairly negative after breaking a main bull trend line and a more significant 200 days moving average. with the recent attempt briefly through the main bear trend line drawn of 1790 high, seeing short-lived for now as the pair returns, as the price returns, attempts to break back below the line, opening way for further extension. 1625, 61.8% retracement is our next target, ahead of 1604, low of 9th of January 2012, and 1600 as the round figure support. On the lower time frame, studies are also negative for our charts. Is a negative structure that is pointing lower. The similar situation is on the 1 hour chart. We see that the downside is currently favored, and we are looking for test of 1634, break of which is required actually to open way for more significant losses of gold, as the recovery attempt of 1634 failed just above 38.2% retracement of the down move from a lower top at 1716, that bottom at 1634, break below 1634 to confirm the end of the recovery phase and open way for a fresh leg lower with the targets previously mentioned 1625 and 1600. Quick look at crude oil also, that coming under pressure again as upside rejection at above the levels at above 108, which was the initial barrier 108.30. Force break above it, hit 108.68 ahead of fresh weakness. The brief recovery was capped at 107.62 yesterday, and now fresh weakness underway. 4 hour studies already negative, similar with the hourly studies. Focus on as the initial support at 106 is now under attack, 106.01 seen so far, with the next level at 105.69 ahead of a more significant support at 104.30, 104.30 zone, which is the current range floor, and the break basically below this would signal fresh, would show the fresh direction of the oil's price as it entered the sideways movement in the range between 108.68 and 104.30. Below 104.30 we have immediate support at 103.68, which is the main bull trend line of 74.94, low of October 2011, and the previous range ceiling at 103.72. So the stronger support is seen at levels of 103.60-70, and basically this is a break point. Loss of these levels, where are also close to it, 55 days moving average on the daily chart, might trigger more significant losses of the crude oil price. There was a question about New Zealand dollar, I guess, so we're going to take a look quickly. First, we're going to take a look at on the daily chart just to see the current direction. Very significant is current attack at 200 days moving average. There is a brief break already below this 80.88 with the pairs price dipping to 80.62 just off the strong support at 80.59. Studies on the daily chart are turning negative and keeping the downside favor. We need to see the clear break below 20 days moving, 200 days moving average, pardon, and the previous low of 15th of March at 80.59 in order to resume the current downtrend of high of 84.69 posted on 29th of February, the latest leg higher from the low of 74.60 that peaked at 84.69. Basically, we have at 80.59. We have the 38, close to 58, 38.2% Fibonacci retracement. So a strong support zone at this level in case of a firm break lower to see more significant losses of the recent high at 84.69 with the 70. 79.88 and 90 days moving average to come first, ahead of 79.64, 50% retracement, ahead of more significant static supports at 78.75, 78.45, previous peak of 8th of December 2011, and the 61.8% retracement at 78.45. A quick look at lower time frames to see the hourly studies are deeply into negative territory, and up in their extremes, especially the momentum that is at extreme lows, while the MACD is also stretched lower. So far we have no signal of any reversal, so the downside remains favored on the 1 hour chart. 4 hour studies are also pointing lower, firmly below their midlines, and yet also no firm signal of any reversal so far. So we need to watch the level at 80.59. Break here, firm break here, is to open more significant losses of the pair. That was all for today. I wish you a nice day and very successful trading. Good luck.